Welcome back to another video. Welcome back to Royalty Fix Academy. Today we are going to cover trend line. Okay. Like before, everything that I cover is in our book that's available now on Amazon. All you got to do is type in Royalty FX Academy and you will have a 7-book collection. Okay. It's called the Royalty FX Academy Mastery Collection, where you learn the ins and out when it comes to trading. We have a book that covers price action. If you want to understand when to buy, when to sell, right? The exact candles that tells you if market is going to buy, or when it's going to buy, or when it's going to sell. All right. We have a book that covers stop loss, the ultimate stop loss. If you're having a hard time understanding where to place your stop loss, we have a book that covers that also. All right. We have the mastering the bearish forest, everything that you need to understand about selling the market, all the different variations of double tops and the breaking retests that comes after that. All right. And when we have the ultimate buying setup, just like the name says, right? The ultimate buying setup, all the buying setups the market will always give you, either if you trade gold, the NASDAQ, the NQ, right? GJ, GU, the AU, right? The US 30 or the German 30. Okay. From double bottoms to breaking retests with the Fibonacci and stop loss placement. All right. And then, of course, we have the discipline paradox, the ultimate psychology book, where we teach you the ins and outs, step by step, of what to do to build a better psychology for trading. We are not telling you what somebody else went through. We are giving you step by step guidance in regarding to what it is that you need to do to become more fundamental, right? And have more control of your emotion when it comes to trading. Okay. Discipline paradox. And then, of course, we have success in sight, right? This is one of my favorite books because, volume 1 and volume 2, it's a workbook. It has everything that you need to understand when it comes to drawing your zones, understand what structure look like, understanding the higher highs, the lower lows, and the uptrend, where to place the zone, how to start the zones, where to place your fib from top to bottom, from bottom to top, either if you're trying to buy the market or sell the market, the RSI, what's the difference between a divergent and an oversold or overbought market. So this is a 60-day workbook challenge, right? You want to keep that to yourself, locked in. I can guarantee you that by the time you finish with this workbook, you will learn to understand how the market works. You will learn to understand how the zone works, because this is what this book is for. Very, very minimal reading, just work, but like maybe 1% reading. All right. Now, with that being said, today we are covering trend line. All right. Chart look pretty nice, right? So this, just before we move forward, these are some buys that I took. And this is the current sell that I'm hanging on to, and targeting the structure zone right there. Of course, I'm looking for it to dump a little bit lower, but I'm being patient to see how that plays out. Right. Since we're covering trend line, we're going to come back to this to show you some work. But first thing first, with everything that we do, we always got to cover all rules when they come to trading itself. If we are back testing, right, forward testing, paper trading, or demo. Now, let's go ahead and knock out all rules real quick, okay? Straight to the point. When it comes to trading, you got to have these rules if you want to be successful. All right? These rules are your psychology. Those rules are what's going to keep you aligned, keep you direct, keeping you from melting, breaking apart, punching your screen, cussing out, because these rules are what you're going to be doing when you back test. So when you actually forward test, these rules are going to be right beside you. And when you actually forward test, they're going to be right in front of you. And when you finally go live, you will be executing these rules. These rules itself is basically how to trade. All right. And it helps you keep your trading log, documenting the trades that you are taking. Now, rules when it comes to trading. Now, rule number 1 is higher time frame. What do I mean by that? Your technical analysis, your trend line, your zones, the setup that you are waiting for, right? The time frame you are trading has to be based off the higher time frame. Time frame such as from the highest to the lowest. Okay, so let's go ahead and mark them real quick. We're gonna have the month. Okay, the monthly time frame. Okay, where again your technical analysis, either double top, double bottoms, break and retest are going to be coming from. Okay. And then we have the weekly. All right. So remember, we're going from the highest to the lowest. And then we have the daily time frame. Okay. Rule number one, monthly, weekly, daily time frame. These are the time frame you use for your technical analysis. Just like we're going over today, trend line, all trend line have to be based off daily, weekly, and monthly because we're looking for continuation and reversal. Rule number two. Rule number two is the next time frame you're going to be looking at after you look at the higher time frame for your technical analysis, right? That time frame is going to be your entry time frame, which is the H4, right? That is the 4-hour time frame. You wait for the 4-hour time frame for your setup to be available for you, right? And that follows the, let me see, let's put that in there also. Time frame for entry, okay? Time frame for entry, okay? So rule number two is the time frame you use to enter the market. Rule number three, that's going to be your PA, aka your price action, all right? PA, right? Your price action. The combination of two candles that tells you the market is going to buy or the market is going to sell. Now, we only trade D engulfing bar, right? What do I mean by that? We only trade D engulfing bar. The engulfing bar. All right. So basically, what I mean by that is our price action, right, is going to be available on a 4-hour. It's going to be a 4-hour either bullish engulfing or bearish engulfing. The engulfing bar is pretty much when you get a bullish candle that engulf the previous bearish candle that indicate that buyers have now taken control of the market, and then you would enter. Simple, right? You have to wait for the market to tell you who is in control, right? So at your specific zone, right? At your specific zone, you wait for the market to tell you in a 4-hour who's in control. So here would be a bearish engulfing. Okay, so where you get a selling candle, let's put a little bit of color into that, right? You get a selling candle that closed below the last buying candle, okay, that indicate, right? You would enter here. That indicates sellers are now in control. These two time frames go hand in hand because that's the 4-hour time frame where you are waiting to enter your trade, and your 4-hour price action will be available to you in the 4-hour time frame. Okay. Now, rule number 4 is the last and very important. Okay, that is your SL. Let's make this a bit bigger. Okay, that is your SL. All right. SL. What do I mean by that? I'm talking about your stop loss. Okay. If you slow it down, you just think about it, it just means stop losing. Okay. Your stop loss is your risk management. Okay. Basically, whatever it is that you're willing to risk. You know, if I have $5,000 in my account, I told myself that, hey, okay, no matter what happened, I am going to risk 100 or two, let's say $250 as my stop loss. And we, of course, we always place our stop loss at the last high or the last low. I'm going to put my stop loss last high. It's going to be 250. It doesn't matter if my stop loss was 100 pips. I'll drop the lot size. That way it equals 250. If it was 100 pips, drop the lot size. That way it equals 250. If it's 50 pips, okay, adjust the lot size. That way it equals 250. Okay. So no matter what happened, you understand that amount that you're risking. That's how you stay consistent with your trading. Okay. So stop loss. So one more time, when it comes to trading at Royalty FX Academy, we are very disciplined. We make sure we understand the ins and out. We have steps to take all of our trade, right? First thing, rule number 1, higher time frame setup, meaning all of our technical analysis are based off the month, week, and day. That way your chart is not overwhelmed, just a few zone, and we're looking at the overall trend as far as where the market is going. Okay. Rule number 2, which is the H4, the 4-hour time frame. That is the time frame we trade. We enter for a trade. I'm sorry. The time frame we trade, or the higher time frame where we enter for a trade, will be the 4-hour time frame. Now, our price action, or PA, will be the engulfing bar, either a bullish engulfing or a bearish engulfing. Just like I have on the ultimate price action, I have all 6 different variation of bullish engulfing that the market will give you or might give you at that specific zone or setup section, and also all 6 different variation of bearish engulfing that the market will give you or might give you at that specific zone. I guarantee you, right, before the market buys or sell, it has to give you an engulfing bar. There is no if or but every single time. Okay. Of course, back down to rule number 4, that is our stop loss, where of course we put a stop loss at last high or last low. Let's throw that in there real quick, right? Last high, right? And then let's put low. Okay. Last high or last low. Okay. Very simple, straight to the point. These are the rules you follow. The same rules are the method that you follow when you take your trade. Technical analysis, monthly, daily, weekly, right? And then 4-hour time frame where we waiting to execute 4-hour price action, boom, and then stop loss place according to the last low. All right. This would be our rules when it comes to trading. All right. Straight to the point. Okay. Now we cover rules. Let's cover a little bit with setup itself. Based on what we're covering, since we're covering trend line, all right, trend line is literally either a diagonal line, well, semi-horizontal. Let me see. Well, I'm sorry, a vertical line, right? That goes either straight down or straight up. But today we're covering downtrend, right? So let's just do a small little infrastructure where we got market falling, right? Like so, right? We will typically have a trend line coming down like so. Now the trend line is basically a zone itself, right? Some of us that use, or some of you guys that use the moving average, the EMA, if you use the 50 as the lowest, and then you use 100 and 200 going to the highest, those moving averages will be considered as your trend line or your zones, right? The trend line pretty much, just like the name, it pretty much tell you where the market is trending towards, right? The market is trending down. In the case of how you would trade that, when you get a break, right? Like so, you notice that market come back and retest. The retest normally a lot of time, right? It hit towards the same trend line. It hit the line itself to come right back down. Okay. Now I want to make that very, very clear. Trend line is just another indication, another indicator that you use to help you understand the overall general direction of the market. Okay. I don't want you to just go and trade trend line. All right. It's just another confluence to help you understand the overall trend, either continuation or reversal. Okay. So on and so forth. As you can see, in the case of this one, it hit the trend line exactly, but that's not what you're looking for it to hit the trend line. It's just sometime it happened to hit the trend line, right? So again, it broke a previous lower low, right? Where it gives you a low high, right? Here, you will be waiting for your PA, okay? You'll be waiting for your PA, aka your price action. Once market give you that price action, you execute your sell trade and you look at the previous high to place your stop loss. Of course, we're targeting TP based off structure, right? Previous structures right here, and then so on and so forth. All right. Straight to the point. Very easy. Now, let me go ahead and cover the next example of what we're going to cover today when it comes to the trend line itself, right? So again, same concept. We have a downtrend market, right? See that? A downtrend market, and then a downtrend market is also considered as a bearish market or a selling market. All right, just in case if you guys needed that information. And in a downtrend market or a bearish market, you always look to take a sell, and all your sell will be available at a low high. Okay, you get the lower high after market gives you a lower low. Let's go ahead and throw these lower lows real quick. I don't want to just say it. I want to interact with the board that we guys actually understand that, right? After each lower low, when the market goes up before it goes down, it will give you that low high, right? Boom. After the lower high, we anticipate a new lower low, right? That's lower than the previous low, like right here. See, I broke that low itself to give you a new lower low. After that lower low, it bought up, right, to give you a new low high, okay? And then so on and so forth. Once market, sells to break that previous low, right? Again, another low high. Now, let's go ahead and throw that trend line in there real quick. Okay. So again, a trend line is pretty much a line that's going straight down. Of course, I'm going to show you exactly how to place them, or two different ways, but it's a trend line that's going straight down. And let me go ahead and show you basically when we get a trend reversal, right? Basically how market would look like when they break the trend. Now, just like before, right? To get a trend reversal, a previous high, to be more specific, right? Not just a previous high, a previous low high has to be broken, especially with a downtrend, right? So to get a trend reversal, a previous high got to be broken because we are talking about a downtrend market. It has to be a low high. So with the trend line, right, we would look for market to do something like so, right? It will break the trend line, okay? It will break the trend line. Not only just break the trend line, market will typically break structure when it breaks the trend line, right? The structure we're talking about is the previous high, right? That previous high is this right here. See that? That's the previous high. Once market breaks that previous high, we look for it to come back and retest, either retest the same zone, but in the case of this, retest the trend line. Now, it doesn't always have to bounce off of it. Let's see. Maybe we could make this trend line a little bit better, but let me see if I could do that real quick. Still, what do we have here? Let's see. Oh, this will it work? Or not? All right. Well, all right. So look, market broke the trend line. So we look for a retest of that trend line, right? So after market breaks a previous low high, the structure that we have will be considered as a higher high. Why? Because it's going to be higher than the previous low high. Okay. Very simple, straight to the point. Now, once markets start falling down like so, right? Go ahead, mark this real quick as a new high point. This will be considered as a higher high. And of course, let's make sure we identify every low point. And let's just throw a zone here. Okay. And also here. So we have a trend line being broken, which would be this right here. Okay. Right. See, trend line being broken. Okay. It broke through it. Right. Now, I want to make that a bit clear that we guys understand. It's not that we want market to just break trend line, right? We want market to break trend line at a point where it also broke or break a previous high point, okay? Because a lot of time it could break the trend line and then just continue back down. A previous high point has to be broken. Again, the trend line is just a confluence, okay? Once market breaks the trend line, we look for the retracement point. Now, we have structure zone that we wait for. Either here, we look for PA, okay, or 2, which is right here, okay? Price action here, because we don't know how far the market is going to retest, but we understand these are the zones it has to bounce off for the most part, right? And of course, we have the previous low. So at any moment in time, when and if market come to one of these areas, let's dot it this real quick. When come to one of these areas, we'll look for a bullish engulfing, right? One of our 6 different variation to buy it to the top and anticipating. That's the word we want to use, of course. We cannot just assume that's what it's going to give us. We can anticipate, right? We're gonna hope, nothing wrong with hoping, right? We're gonna anticipate for the market to go ahead and give us a new high, right? Where it will go up to break this previous high and, so on and so forth to give you a new higher high. Now, of course, either if you bought it here, TP still at the next structure point. Or if you bought it here, TP still within point, or down here, TP still within structure point. All right. You just got to follow the rules, respect structure for what it is. All right. Of course, when market hit TP, feel free to put your stop loss in profit or trail stop, or set a TP where it just close you out. All right. That's really up to you. That goes hand to hand with part of your rules when it comes to your trading psychology. You're either going to leave this or your TP get hit, call it a day. All right. So